For those who are hurting due to the Australian dollar and interest rates, the Reserve Bank wants you to know it feels your pain. But according to Bank's Deputy Governor, Ric Battellinoi, there are necessary evils in a world where the mining boom will roll on. Today's investment numbers backed up the argument. Here's Philip Lasker.
You could hardly call the Reserve Bank's Deputy Governor a pessimist.
We're at a stage of the cycle where the world economy is still gathering in strength. That's going to be the dominant force for the world.
So the dominant forces for Australia are a resources boom and inflation.
That is likely to be accompanied by rises in global interest rates.
The RBA was among the first and most aggressive interest rate movers, and it's maintaining that outside of parts of Queensland and Western Australia, home borrowers haven't been hurt. But credit ratings agency Fitch today reported increasing stress in the home mortgage market during the March quarter. Arrears of 30 days or more on prime mortgages hit a record high. Arrears on low doc loans also rose. The ratings agency says it's partly due to the Christmas spending hangover.
This year I think that has definitely occurred and in conjunction with the lagged effect of the November interest rate rise, as well as some of the natural disasters that we've had earlier this year have had an impact.
The Reserve Bank acknowledged that households are being squeezed.
The increase in indebtedness over the past 15 years does mean that households are now significantly more sensitive to changes in interest rates. The proportion of household income devoted to servicing debt is relatively high.
And the strong Australian dollar is squeezing some businesses.
We are conscious that some sectors of the economy find this level of exchange rate much more difficult. But that's something that's very hard to avoid.
Ric Battellinoi doesn't blame Australia's relatively high interest rates for the strong dollar. He blames the mining boom. And mining had something to do with a 3.5% rise in new business investment during the March quarter. The stronger gain pushed yearly investment growth to over 10%, the strongest increase in 2 years. And the Australian Bureau of Agricultural and Resource Economics and Sciences reported a 31% jump in major mineral and energy development projects to a record. Western Australia accounts for well over half the advanced investment spending.
It's certainly a very high level of investment and is largely focused on the coal, iron ore, oil and gas sectors.
And as far as the Reserve Bank is concerned, it's investment based on sound commodity price fundamentals.
There's no doubt there's a bit of speculative activity as well, but fundamentally it's very strong demand that's driving this. How long it continues? No, I don't think anybody knows. And it's just I wouldn't want to forecast. I mean, most people have been forecasting for the past year at least that commodity prices are going to come down. They keep going up. It's not clear they've even peaked yet.
At the RBA, recovery is still the reality. Disaster remains a risk.